Why does Bitcoin's price tend to skyrocket after halving? What's the secret behind the mechanism that controls Bitcoin's supply and rewards miners? In this video, we'll unravel the mystery of Bitcoin halving and explore its connection with mining. If you're ready to dive deep into Bitcoin's heart and understand how it affects your wallet, stay tuned. Let's start with the basics. Bitcoin mining. What is it and why is it important? Bitcoin mining is the process of verifying transactions on the Bitcoin blockchain and adding them to the public ledger, known as the blockchain. It's a decentralized process, meaning that no single entity or government controls it. But here's the interesting part. Miners are not doing this for free. They are incentivized through rewards, specifically freshly minted Bitcoins and transaction fees. The blockchain is a decentralized ledger that records all Bitcoin transactions. To verify transactions, miners solve complex mathematical problems known as proof of work. This ensures that all transactions are legitimate and secure. Miners validate blocks of transactions, adding them to the blockchain. In return, they receive Bitcoin rewards and transaction fees. Mining requires significant computational power, often leading to energy-intensive processes. Specialized hardware like ASICs, application-specific integrated circuits, is now common in mining. Initially, miners received 50 BTC per block when Bitcoin started in 2009. However, this reward decreases over time. So now that we understand how mining works, let's jump into the halving mechanism. Bitcoin halving is one of the most important events in Bitcoin's life cycle. It's baked into the protocol, and it occurs roughly every 4 years. But what exactly happens during a halving? Bitcoin halving cuts the reward that miners receive by half. For example, in 2020, the reward went from 12.5 BTC to 6.25 BTC per block. This halving happens every 210,000 blocks, which is roughly every 4 years. Halving is designed to limit Bitcoin's supply and create scarcity. Unlike traditional fiat money, Bitcoin's supply is capped at 21 million coins. By halving the reward, the rate at which new Bitcoins are introduced into circulation slows down. As fewer Bitcoins are mined after each halving, the supply becomes more limited, which often leads to increased demand. Historically, Bitcoin's price tends to rise after halving events due to the anticipation of scarcity. Bitcoin halved in 2012 from 50 BTC to 25 BTC, 2016 from 25 BTC to 12.5 BTC, and 2020 from 12.5 BTC to 6.25 BTC. The next halving is expected in 2024, cutting rewards from 6.25 BTC to 3.125 BTC. You might be wondering, why does halving matter so much? To answer this question, let's break down the effects it has on miners, investors, and the market as a whole. After a halving event, miners earn fewer rewards, which can lead to a decrease in profitability for smaller mining operations. Some miners may leave the network due to reduced profitability, causing temporary dips in hash rate. Historically, Bitcoin's price surges in the months following halving due to perceived scarcity. Investors often accumulate Bitcoin in anticipation of higher prices post-halving, leading to speculative buying. With each halving, fewer new Bitcoins enter circulation, leading to a supply shock. The idea is simple. If demand remains constant or grows and the supply decreases, the price generally moves upwards. Bitcoin halving events often create a psychological effect. With the knowledge of Bitcoin's fixed supply and the halving scarcity effect, many investors adopt a long-term perspective. Bitcoin halving doesn't just impact the miners, it's intricately linked to Bitcoin's market cycles. To really understand Bitcoin's price movements, you need to grasp the concept of these cycles. Bitcoin's market history seems to follow a 4-year cycle, closely aligned with halving events. After each halving, there's typically a bull market, followed by a bear market, and then a period of consolidation. After the 2012 halving, Bitcoin's price soared in 2013, reaching $1,000 for the first time. The 2016 halving was followed by the infamous 2017 bull run, where Bitcoin hit $20,000. Similarly, after the 2020 halving, Bitcoin reached an all-time high of $69,000 in 2021. While history is not always a predictor of future performance, many believe that Bitcoin's fourth halving in 2024 could trigger another bull market. However, it's important to consider that Bitcoin is now more mature, and the impact of halving may be different as market dynamics evolve. With each halving event, mining Bitcoin becomes more challenging and less profitable in terms of reward size. So, what does the future hold for miners? As rewards continue to decrease, miners will have to rely more on transaction fees as a source of income. Over time, Bitcoin mining could become less accessible to individuals and more dominated by large mining operations. Due to growing environmental concerns, there is increasing pressure on miners to use renewable energy sources. Countries like El Salvador and companies like Tesla are exploring ways to make Bitcoin mining more energy efficient. As Bitcoin's reward approaches zero, around 2140 when the last Bitcoin is expected to be mined, miners will solely rely on transaction fees. This could mean higher fees for Bitcoin users, but ensures the long-term security of the network. Okay, this was everything about Bitcoin halving and mining. If you found this video insightful, don't forget to hit that like button and subscribe for more crypto content.